The Rebel Capitalist Show.
All right, guys, it gives me a great deal of pleasure to welcome someone back to the Rebel Capitalist Show. He is my good buddy, Jason Burack. He is the inventor of stagflate, tax, and lie. Exactly what we've been seeing from the government over the last 2 or 3 years. Jason, welcome back to the show, my friend.
Thank you, George. I'm glad to be back. And unfortunately, it sucks being this right. But if you study financial history, as the economy gets worse, whether it's a monarchy or an empire, and all over the world throughout financial history, this is what governments do. They devalue currencies and they increase taxes even as the economy gets worse. And now you're starting to see here in the West, politicians, bureaucrats, labor unions, labor right activists talk about raising wages. So, I mean, the stagflation, like even if commodity prices crash, the stagflation is not going to magically go away very quickly.
Yeah, I heard FedEx came out yesterday, I believe, and said that they're going to be raising prices by like 6 or 7%. And they referenced the increased cost of labor as one of the reasons why they're making that decision. And then I think just after they came out and said that, UPS came out and did the same thing. And I think a lot of these businesses have really held off on trying to increase prices, although I think we've still seen prices go up, but they've held off on increasing them to a significant degree because they're worried about their competitors, but now they're just all kind of capitulating. And do you think we'll see the same type of price inflation in the rest of 2021, 22 that we saw in 2020?
Well, I think what the governments and central banks and also what the politicians and bureaucrats are doing, just with all the rules and regulations for who can't work, which industries have to do this, the compliance is a nightmare with the pandemic. So it's creating all kinds of distortions. And then you have these groups, like I said, wanting to raise wages, talking about inflation. So it's feeding on itself. Right. I don't know which prices are going to go up more or less. Like we've had natural gas prices up enormously in the last 18 months. That was very, very predictable. I've actually been more bullish on natural gas than I have on oil because all that shale gas byproduct that was being flared off since 2008 with the unprofitable subsidized shale oil production boom that was happening since 2008, almost all of it came offline. That shale gas production. So it was obvious there was going to be supply problems if demand came back. And now with much higher natural gas prices, you have Putin playing games in Europe with the amount of supply is available to a lot of European Union countries. So all natural gas is actually involved in the production. It's not just transportation costs. There was a Bloomberg article on September 4th. Your editor can pull up the headline. I ran a short video on this in the last week or two. There's a Bloomberg article talking about how natural gas and natural gas liquids are involved in the production of many things. So it's oil and natural gas higher means much higher production costs, not just transportation costs. But I think you touched on a really good point there that really last year, there wasn't a lot of price increases like we thought there was going to be. And from speaking with people who work in supply chains, either in China or in the United States or elsewhere, they said that they didn't want to pass on a lot of the cost increases to customers because a lot of people lost their incomes. They're worried. So now we're getting really a lot of the cost increases that should have happened last year. We also got comments from the Costco CEO. They've been talking about this. We got this out in the last couple of days. But they've been talking about this for 3 quarters now. It's a double whammy, George. It's not just stagflation, it's shrinkflation too. So you got both. So you have shrinkflation and stagflation, and it's really hurting the consumer. So even if asset prices temporarily deflate and the Fed allows asset prices to drop for a couple weeks or a couple months, the consumer is still going to get slammed in a lot of aspects for all the everyday goods and consumer goods that they need.
Yeah, I researched a story for a video I did earlier today about how housing prices, as we all know, are just skyrocketing. I think they've gone up by over 17% in a lot of markets just in the last 12 months. But now that rents are going up at an almost by the same amount. The rents are going up. I think it was 11.5%. So you have all these people that are being priced out of the housing market for buying a home, but then they go over to the rental market and they're being squeezed there as well. I think the average rent in the United States for an apartment was, if my memory serves me right, based on this article, I think they got the information from realtor.com, but it was $1,633, up $200 a month just since 2019. So how is that affecting the consumer in addition to everything else that you're talking about?
Okay, so that's the real world numbers. Okay, so the consumer price index, or as I call it, the changing propaganda index.
That's another one I'm gonna have to steal from you, buddy. That was good.
Yeah, we're at basically Soviet levels of economic propaganda. It's not quite Chinese Communist Party levels where they know the GDP, what it's going to be 12 months, 18 months in advance, but we're getting there. We're headed that way. We're definitely headed that way. So the changing propaganda index, they use this fictional formula called the owner's equivalent rent. And the owner's equivalent rent says that rents are only up about, I think, 3%. It was 2.3% a couple quarters ago. So you just cited the reality. The reality is 7x to 10x more, depending upon which major metro area you live. I just saw another New York Post article out in the last 10 days that some people on their rental renewal, they had a 70% increase. So I don't think that's for everyone. That's probably just high-end neighborhoods in New York City area. But the overall averages are, like you said, they are up 7x compared to the owner's equivalent rent. So reality is 7x differential versus the fictional changing propaganda index owner's equivalent rent, which is, and by the way, George, the owner's equivalent rent makes up 25% weighting of the changing propaganda index, or CPI. So that's how divorced from reality we are. But it's in the government, and this is the most important part. If your listeners are not familiar, it is in the government's incentive to underreport inflation because of cost of living adjustments.
That's right.
So if they were honest about inflation, if they used either the Chapwood Inflation Index or the Shadow Stats numbers, and John Williams isn't making these numbers up, that's the government's old inflation formulas from the 70s and 80s. So those were what they used to use. So if they use those numbers, the cost of living adjustments on Social Security checks, on government employee retirement plans, you know, all these things, social program payments, all these things would have to be moved up. They don't want to do that. They've talked, there's been people in Congress, I think Newt Gingrich and also Democrats over the last 20 years have talked about this, like in actual like C-SPAN like recordings, actual like on the floor of Congress talking about how, they don't want to make payments like this. So it is in the government's interest to underreport inflation. This is a major component of the lie component of stagflate tax lie.
Yeah, and Jerome Powell comes out, and I thought it was really telling that he says, well, yes, there's some things, a couple things here and there that have gone up in price. But if you eliminated those things, then we really haven't seen any inflation at all. And he's telling you this at the same time that they're going back to that just ridiculous philosophy that because inflation was lower than their target for 10 years, for some reason now it needs to be above their target for the next 5 or 10 years. So they have to make up for lost time, which if you read what they say and the rationale for increasing the inflation rate, it just makes absolutely no sense whatever, because they're worried about deflation. So how would what happens in the past affect potential deflation in the future?
Well, everything is so corrupt now, George. You have all these leaks coming out, and this is opposition research because they're trying to get in Democrats who will print even more, who will spend even more into the Fed. They're trying to get rid of the Dallas Fed president. They consider him not aggressive enough. They're trying to get rid of Jerome Powell. Yeah, so they're coming out with.
Said Jerome Powell isn't dovish enough. That's what AOC was saying. Like, what are you talking about?
Well, he doesn't support the Green New Deal, and the Green New Deal for DC. You know, you have the false narrative that they're going to spend all this on green energy technology. Really, it's just more money, more currency to steal for DC elites. So you have tons of people here in DC, government employees, politicians, bureaucrats, their aides, lobbyists, dealing in inside information from government agencies on stock tips. Stevie Cohen, the billionaire hedge fund manager, he was paying people at the FDA for inside information on which drugs would be FDA approved. I think he just paid a fine. I mean, in the past, maybe he would have paid a larger fine or gone to prison. He didn't go to prison. Now he owns the New York Mets.
Yeah.
So the amount of corruption is pervasive. The stuff that's coming out is nuts. It's both political parties. It is insane in DC how many people come here with very little in their retirement account, 100,000, 200,000, and 5 to 10 years later. And yes, publicly, there's these public disclosure forms that they can't trade stocks, but these people are lawyers, George. They have law degrees. This is the district of criminals. Most of the people here are white collar criminals with law degrees. So they know all the loopholes. They know how to get around the law. And they think they're, what's most important, they think they're above the law. So they are trading on inside information, and it's about stocks, it's about real estate deals, and it's just freaking nuts how corrupt. And these are, a lot of the people here are champagne socialist hypocrites. So in public, they will give speeches about how bad capitalism is, right? And yet they're asking for bribes to get real estate deals done in DC. For DC, I know people involved in DC real estate development, and they've walked away from deals because they were told they had to pay $25,000 each in bribes to, to foreign bank accounts.
Yeah, it makes a lot of sense.
The whole thing, it is so corrupt. The average American, the average American listening to this does not understand that we are at Roman Empire levels of corruption here in DC.
Yeah, again, I was going to say that doesn't surprise me, because every time I talk to someone who's really trying to, let's say, avoid legally avoid taxes, 9 out of 10 times there's someone that's extremely liberal. And I want to be clear, I dislike both parties equally, but it's shocking how many times people I know that are extremely liberal are trying to reduce their tax rate.
Well, no coincidence that the stock market is in a correction. Things are in a correction after this news got out that the Fed's going to taper, and the comments that the Dallas Fed president made that he's going to sell all his stocks after he perfectly timed the bottom, right? So he made millions of dollars on inside information for his stock trades. Jerome Powell, too, made millions of dollars, at least 1.5 million. I've seen estimates as high as 5 million or higher for his municipal bond trades, and the Fed was buying those too.
Yeah, I saw a story on that. And another thing that, going back to what Jerome Powell was saying, is that how he's trying to just gradually omit certain things from that bogus CPI calculation. It takes me back to that story from Arthur Burns, or about Arthur Burns, excuse me, going back to the 1970s. And this was a story that came out a few months ago, and I can't remember who wrote it, but the individual actually worked at the Fed under Arthur Burns at the time. And he was probably a young guy, maybe in his early 20s or something like that. But he said that when this started to play out in 1972, 1973, when they started to see the CPI go up, Arthur Burns was saying the exact same thing that Jerome Powell is saying right now. First, it was oil. Well, he wanted to take that out of the equation because that was just temporary, and so it doesn't really affect things. And then he wanted to take out anchovies. I don't know, or I'm sorry, he thought that inflation was temporary because the price of anchovies had gone up so dramatically, and they used anchovies in fertilizer, and they used it to feed cows or something like that, and then the cattle feed. And so he thought that because the price of anchovies went up because of some rare weather event, that made the entire CPI go up. And that was another reason that he used for inflation back then being, quote unquote, transitory. And it's the exact same thing we're seeing now.
The funny thing is, the most honest Fed person that I've seen lately is actually Alan Greenspan, and that's since he's left. So for the last couple of years, he's been saying there's going to be really bad stagflation. So now that he's gone, he was like, I'm loading up on gold. Every time it gets smashed, I buy more physical gold. And there's going to be really, really bad stagflation because of the monetary and fiscal policies that the US government is on. But it's not just the US government. You have the European Central Bank buying They announced that they're going to do some type of taper, but it's not really a taper because they're still going to buy around 100% of all the net government bond issuances.
Right.
So it's not really a taper. I mean, if you're morbidly obese and you're eating 5,000 calories a day and you drop down on your diet to 4,900 calories a day instead of 5,000, is that really meaningful if you're morbidly obese?
Yeah, is that really a diet?
It's like dropping 100. Oh, I cut back on one Coca-Cola.
Yeah, that's actually a perfect analogy. And how do you think this plays out with ESG? You know, when you were talking about the supply disruption with natural gas, that's one thing that came to mind. And so many people look at the demand side of the equation when it comes to commodities, like oil, as an example, say, well, you know, the world is moving away from oil. We've got this ESG movement. There's going to be no more capital going to the production of oil. And they see that as a negative thing. But you look at that and like, I don't know, from a supply side, that seems like a bullish tailwind. What do you think about that?
ESG is the opportunity for people here in the DC metro area to spend trillions more and then waste, fraud, corruption, and abuse, just like how the infrastructure bills here in the DC metro area, and I've been living here over 20 years now, it seems like every couple of years there's an infrastructure bill, and then still none of the infrastructure here in the US gets fixed. And that's right, because a lot of it is stolen or wasted. So unfortunately, well, what the US should be doing is, instead of actually flaring off all that natural gas that was from unprofitable shale oil production, right? We should have built storage tanks for that natural gas since 2008, and we should have stored it instead of flaring it off. There was so much natural gas flared for the last like 12 years that you could see it from space. So we wasted all that natural gas in the shale oil production as a byproduct, an enormous amount the last 12 years. It wasn't stored. That money should have been spent on infrastructure. We need to invest in nuclear. I am a big proponent of the liquid fluoride molten salt reactor. There should be lots of money, millions of dollars spent on research and development of next generation nuclear technology. Unfortunately, we can't here in the United States, the red tape, the rules, the regulations, getting through the Department of Energy, the construction companies who want billions of dollars. It takes 10 years of permitting or more, tens of millions of dollars worth of permitting and red tape to get one nuclear power plant approved here in the US. So we should switch the transition. Some of the most energy dense energy is nuclear. There is better nuclear than the current technology, but that's not being done either. So there are so many things being inefficiently done. China is actually the biggest polluter. So China is still, while they're announcing that they're banning cryptocurrency, right, for the regular Chinese people. By the way, the Chinese elites, the Chinese Communist Party elites and the billionaires and the higher ups in the Chinese government, they're not going to have a Bitcoin ban or a crypto ban. They're going to be able to speculate on it. They're going to be able to launder stolen funds from all the trillions in bailouts that are going to need to be printed to bail out Evergrande, to bail out, the Chinese banks that are holding bad debt for Evergrande and the other Chinese real estate developers. And there's going to be many trillions printed inside China. They're going to manipulate their foreign exchange rate against the dollar and the euro.
Well,
they're claiming
let's go down that path, Jason, because
I
think that's a great thread, and it's right on the top of everyone's mind right now.
Yeah. So let me just wrap up here on the clean energy. So China should be, for ESG and clean energy, China, an easy fix for China to improve their environment would be switching to natural gas quickly. They are supposedly, the press releases are they're investing in clean energy technology, but they're still opening coal-fired power plants. So you have these press releases saying China is going to ban Bitcoin and Bitcoin mining because it's bad for the environment. Meanwhile, they're still opening up coal-fired power plants. Right. So it's total hypocrisy, total bullshit. I don't know if it's not really that bad of a cuss word, but it's total BS.
No problem, buddy.
It's spin and total BS, but it's not just the Chinese government. The US government's doing it too. All these governments are all doing a variation, different degrees of stagflate tax lie at this point. Now, if you want to talk about the Chinese banking system, I put out a lot of videos in 2019, and there's been Chinese banking system problems, George, since at least 2015. There's been a lot of bailouts along the way to delay things out. And it's been known for years that Evergrande basically was a fraud. They were committing all types of fraudulent activities for their customers. So people put down payments. They were doing a pre-sale scam. Yeah. There were tons of people. There's over 1.5 official documents from Evergrande publicly filed. There's over 1.5 million unfinished homes and condos. The real number is probably larger than that, So they're screwing their customers. They're screwing their investors with all kinds of crazy accounting stuff off balance sheet. They borrowed from China's shadow banking system, which is enormous and very shady. And then they screwed over their own employees. Did you see that? They're forcing their own employees. They were basically saying you'll get fired if you don't put a good amount of your income, your salary, into these wealth management products, which are in the shadow banking system, and the money's gone. It's gone. It was invested in shady real estate products.
Yeah. Yeah. And I read yesterday that the authorities came out and the Chinese government said that to the local authorities that you need to prepare for Evergrande going bust, like insinuating, kind of implying that, we're not going to bail them out. And so what are your thoughts there? Do you think they'll bail them out? Do you think they won't? And if they don't, or if they do, what do you think their rationale is? They meaning the Chinese government.
So I spoke to one of my top sources in China a couple of days ago. He's lived in mainland China for a long time, and he's actually good friends with a lot of the top bankers at some of the major Chinese banks. And what I was told is that everyone's known that Evergrande is a problem for a while. They didn't know exactly when it would collapse, but they knew all the fraud. Evergrande was doing all these different types of fraud just to delay bankruptcy and survive. Yeah. Last year, about a year ago, their bond interest payments on dollar-denominated debt was double digits. So they were above junk bond levels. So that was screaming that eventually time was running out. There's a lot of signs that Evergrande was in trouble years ago. But really the problem is not Evergrande, George, and it's not the Chinese real estate developers. It's the banks that loaned all of these loans on real estate. So real estate is the main underpinning of China's economy. Everything. So whether that's the shadow,
right? 20 to 30% of GDP.
That's the official number. So in China's shadow banking system, with the way their leverage works, their shadow banking system, according to Kyle Bass, is 50 trillion. So the amount of credit, the amount of shadow banking is $50 trillion, not 50 trillion yuan, $50 trillion. Wow. The South China Morning Post did a story in December 2020 claiming that it was only 12 trillion. I've spoken to hedge fund analyst Emma Molman, who's a China expert, Kyle Bass, others, and they said that number is totally wrong. And the official narrative is that China's allowing Evergrande to fail, to start curbing leverage on the banks and fixing things that way.
And housing prices, yeah.
The reality is that Evergrande is being allowed to fail. It's a strategic bankruptcy because the majority of the debt holders were these moron mainstream portfolio managers at BlackRock and UBS and others who were bribed or just straight up like either they were bribed or they were conned. So they're bribed, conned, or stupid, that they overweighted. So in an emerging market stock index fund and an emerging market bond index fund, some of these like either ETFs or index funds for stocks or bonds, they were dramatically overweight Chinese companies. They were dramatically overweight Chinese state-owned enterprises. So there was very large portions of Evergrande bonds and other Chinese state-owned enterprise bonds. And you've had well-respected accounting experts like Jim Chanos and others warn that Western investors, the average everyday American, should not be investing in these Chinese ADRs, which have Caribbean shell companies set up, and the foreign investors have no claim. It's hidden in the documents of the contract. You have to do a lot of reading. You won't see these articles mentioned really on Seeking Alpha. They're all about how all these Chinese stocks are undervalued and they're good buys and they're going to make a lot of money. None of them mention like any of the Caribbean shell companies where the foreign investors have no claim on the assets if the company is a fraud or doing a bunch of fraud similar to Evergrande and decides to do a strategic bankruptcy.
And you, just to be clear, you think that, let's just use Evergrande as an example, their CEOs or their upper management goes to someone at BlackRock and says, hey, we'll pay you $50 million or whatever it is to buy X amount of our stock to bring the price up. And then we can use that as kind of a promotional tool to other investors to say, oh, look, BlackRock's a huge investor. That must mean that we're, on the road to success. You think there's a lot of that going on, and then that sucks in the average Joe and Jane, or maybe the pension fund that is investing all the teachers and firemen and policemen's money?
Yes. Now, I don't know if they were paid $50 million, but there's bribes and corruption. And China has Wall Street. China, normally, the way the Chinese Communist Party works is with the mainstream financial media, they offer them a certain amount of money per year for positive Chinese news coverage. So the Wall Street Journal and other business publications here in the West were given advertising dollars for positive China news coverage, but there's higher fees for the Wall Street investment banks if they do pro-Chinese marketing for a lot of state-owned enterprise companies, the stocks and the bonds. Right. And so like if they overweight and China's not really an emerging market anymore. I mean, China's developed, they're not like Brazil or some of these other countries. They have a diversified economy compared to a lot of these other countries. And yet these emerging market stock mutual funds or ETFs, they had 40% China weightings. So the distortions, this has been talked about for a while. The mainstream financial media doesn't like talking about it though, because they don't like criticizing a lot of the shenanigans that goes on with Wall Street banks and how they're in bed with the Chinese government and Chinese state-owned enterprises. But the real problem here for your listeners, and I've done videos on this in the last week. I've put out quite a few videos on my YouTube channel in the last couple of weeks. One of my videos actually went viral. I'm not going to earn any money on ad revenues on it. Really, I think I made like $20 on like almost 30,000 views on it. That's how bad YouTube censorship is. Yeah. But from what I've been told, you have HSBC Bank, which is not backed by the Chinese government.
Yeah, so Jason, I'm sorry to cut you off, but I was going to ask you that question. So maybe you can expand on that thought. And that's the rebuttal that you get from so many people that, oh, the Chinese banks, they'll never, ever, ever go bust because they're owned by the Chinese government. So go ahead.
So I would actually agree with Chinese state-owned enterprise banks, but that doesn't mean as a Westerner, you should buy a lot of the bank stocks because foreigners, the shareholder rights laws are much, much different. So HSBC Bank is different than China Construction Bank or some of the other 4 or 5 largest Chinese state-owned enterprise bank. HSBC Bank's history is actually adversarial to a lot of the Chinese government. And yet a lot of HSBC Bank's profits, almost all of their legal profits are in Asia. They have loans out to all of the major Chinese real estate developers listed on Hong Kong, large amounts of loans. What they're claiming on their public accounting books is probably not accurate. I've spoken with Kyle Bass about this. He basically told me, I don't know if you're going to get Kyle Bass on your show, but he follows me on Twitter for a year now, and we speak in direct messages occasionally, and we've spoken about HSBC Bank. He flat out said he thinks the shares are going to crash at some point. He told me the equity of HSBC Bank is probably worth close to zero.
Yeah.
I don't know if the shares are going to crash in a month or 2 months. I don't know if the Bank of England is going to bail them out, or the European Central Bank or the Federal Reserve is going to bail them out. But HSBC Bank, the shares are rallying despite the Evergrande news for the sense that makes.
Really? I didn't realize that.
Yeah. The shares have actually, over the last year, the shares of HSBC Bank are down a little bit. But there's a lot of red flags going on with executives leaving and other shenanigans that Kyle Bass has tweeted about.
Yeah.
He's following the HSBC Bank stuff a lot. He did an interview on Yahoo Finance about 2 years ago, and he tried talking about problems at HSBC Bank, and the Yahoo Finance, the people interviewing him, just completely ignored everything he said.
Well, I know he had a conversation on Real Vision. I can't recall if it was I believe it was with Raul, and he just kind of line item went down through his thesis on Hong Kong, China, and the banking system there. And I believe, if my memory serves me right, he specifically pointed to HSBC. What do you think about this idea? And I heard this from my good buddy, Jeff Snider, that, and I talked about it on a whiteboard video last night, where when you had Deng Xiaoping in charge and the collapse of the Soviet Union back in 1991, how Snider was saying that they, meaning the Chinese government, sent economists into Russia to figure out what went wrong. And their conclusion was not that communism is a complete failure, but their conclusion is that they didn't allow capitalism to run long enough or to really flourish long enough to where the revolutionaries could take over and implement their socialist utopia, according to the Marxist doctrine. And so the solution for China was just to continue to allow capitalism to run its course until you got to this point, which they call late stage capitalism. And when you do, then the government needs to take over the means of production, or else the capitalists will really feed on themselves and the whole system will implode. So when you look at what's happening through the lens of the new leader, Xi Jinping, and you see this authoritarian approach that he's been taking, especially over the last 2 years, do you think he is saying, okay, we're at this point of late stage capitalism, and now we need to start taking over the means of production and implementing this socialist utopia and workers' paradise? Or what do you think his rationale there is for being more draconian and kind of more socialist?
I think it's some of that. I mean, China has had a lot of central planning, but also if you were a foreigner, an entrepreneur, a small business owner, and in the early 2000s, you went there up until really like 2014, there was a pretty good amount of free markets and capitalism there. They wanted to make money.
Right.
Things changed a lot from speaking with people who lived in China, who are either still there or who moved in the last couple of years. Things changed a lot starting in 2014 when she consolidated power. So the rules started to rapidly change. They started to change before Trump. But Trump really accelerated this because then he became the scapegoat, especially once he put the tariffs on. And that brings me back to China's shadow banking, which is all based on real estate collateral. So a lot of these banks, and China's going to bail out the banks. Okay, they did this. They've done this in 2015 and 2016. There was enormous amounts of bank bailouts back then. A lot of them did not get out to the Western media. They were talked about in Fed minutes.
Jason, when you say banks, are you talking specifically about the banks that are run or owned by the government, or are you talking about all the community banks? I mean, there's a lot of banks in China that are not run by the government.
Okay, so China has started to nationalize. This started in 2019. They started to nationalize all the banks.
Okay.
So there was independent banks, you're correct. But in 2019, once Baoshan Bank, and that was the first one, and then you had Bank of Jinzhou, which was larger, and then you had other small and medium-sized banks, all within like 2 or 3 months, you had them fail. Did you see who bailed them out? The first bailout for Baoshan Bank, it was the People's Bank of China. The central bank bought a private bank. Okay, that was the first bailout.
Wow.
Then the bailouts got larger and more ridiculous, I would say. So at one point, and I did a video on this back in 2019, you had a $300 billion bailout of a Chinese bank, one of their state-owned enterprise banks, one of the largest banks in China. I have the article screenshot. I spent 10 hours on this China video in 2019, going through all the article titles of all the bank bailouts. They actually had one of the largest banks in China with trillions of dollars in assets. It bailed out an entire province. One of the largest provinces in China gave them $300 billion.
Wow. Okay.
So the bailouts also, there was another bailout where I can't remember if it was Bank of Jinzhou or another one around that size, where one of China's sovereign wealth funds, which has trillions of dollars in assets, they were ordered by the Chinese government to buy a private bank too. So that's the way it was papered over.
How big of a player is HSBC in mainland China? I know they're huge in Hong Kong, but how much mainland?
Very big, because of the Chinese real estate bubble, because the belief there is a real estate bubble in China, and it is perpetrated by the government, because in the major tier 1 cities, in Shanghai and Beijing, the other tier 1 cities, that the Chinese government, I've heard this from multiple people, sources there, and there's documentaries out on this, the Chinese government actually monitors costs that people pay for square footage in those cities. And if the sale price is lower below a certain amount of government approved square footage, they cancel the sale. So they are manipulating prices to try to make sure they cancel sales, to try to make sure the prices go up. But you have tons of scams. There's a book that your listeners should really read. It's by Denny McMahon. He's an Australian. He moved to China. He lived there for over a decade. He speaks fluent Mandarin, and he went and interviewed Chinese bankers. He went and interviewed Chinese business people whose businesses 5 to 7 years ago failed. So these were factory owners, and all of a sudden their business in another industry, say either making toys or plastics or other cheap goods, and their business was either failing or unprofitable, they went to a Chinese bank or they went into the China's shadow banking system, which is many trillions. They pledged their factory, which was unprofitable, as collateral, basically like a pawn shop. The bank accepted an unprofitable factory that would have to be scrapped, or a lot of work would be needed to turn it around. And they then started speculating on real estate. So these are people with no real estate experience who borrowed insane amounts of capital from Chinese banks or the shadow banking system. And the banks are playing around in that too, because the banks take depositor money and then they gamble in shadow banking for higher returns. And this is often sold to the depositors, these wealth management products, as a safe way to earn a little bit higher return than a checking account or a savings account. But the president of the Bank of China, in an op-ed, called these wealth management products, and there's trillions of these in China's shadow banking system, Ponzi schemes, because these things in reality are on very bad construction projects, very bad housing developments and construction projects that have worse collateral than junk bonds or leveraged loans.
Right.
So the residential or commercial buildings or properties or entire housing developments will either not be finished, not started at all, or in complete states of disrepair. And not all of them are like that, but a lot of them are like that.
What do you think the systemic risks are for the real estate market in China collapsing for the rest of the world? I mean, the first thing obviously that comes to my mind is Australia. Their exports, I believe 20% of their exports are iron ore. And so if 50% of the demand, let's say globally, for iron ore is coming from China, and that's a result of this ever expanding real estate bubble, if that bubble bursts, I mean, how does it affect their China's imports, therefore other countries' exports, and what does that do to the global economy?
First off, I forgot to mention the book name. It's available on Audible audiobook. It's about 7 or 8 hours long. It's China's Great Wall of Debt, about shadow banking and ghost cities.
Okay.
By Denny McMahon. So your listeners can go out and get that book. That was written a couple years ago. It's a must read. I think it's probably finish it pretty quickly. In terms of how it's going to affect global macro and markets, you're already seeing that now with base metals. So that's going to affect Australia. You've seen Rio Tinto shares drop a lot. I think the dividend yield is at 10%.
Yeah.
The question is, how long are base metals going to stay low? And are the base metal producers, are they going to cut costs? Are they going to bring on production? Are their dividends sustainable? It's a tough question because we're going to have to see how China decides to handle the bailouts. They are definitely going to bail out the banks. Okay, the real estate developers, they're going to let those debts get wiped because the foreigners, the bond fund guys, and unfortunately, there's a lot of Americans and Europeans and other foreigners who were suckered into this with their retirement accounts to buy these global, to buy these emerging market bond funds, right? And they have way too much exposure to China's real estate market. But the Chinese banks, they're going to print. They're going to print whatever it takes to bail out banks inside China. HSBC.
I was going to say, what about HSBC?
The key for China to do this, if they're going to print that much, if they're going to print trillions, they have to manipulate their exchange rate. Because if China's currency gets really weak too quickly against the dollar and the euro, you're going to have a lot of people pay very high money laundering fees to try to take currency out of China, to try to get their savings out of China. And that's already been happening, but that will accelerate. And I think that's why, George, we just had this crypto announcement for China, because they're anticipating this. They're anticipating trillions more. They're anticipating
not money laundering, but basically capital control.
So the Chinese government is anticipating that we're going to have to do all these bailouts for the banks now. We're going to have to print trillions. We're going to have to make the banks whole. They're going to write off their bad debt, but we're going to have to print because they have all this shadow banking exposure that's all tied to real estate. Trillions. So they're going to print. So they're trying to increase the capital controls and make it harder for the average Chinese citizen to get their savings out of China for a currency devaluation. That would be my opinion.
Yeah, so capital controls. But then how do you think they handle HSBC? Because it's not government, that they've been at odds in the past. Do you think they just let them go bust?
If you speak to Kyle Bass, and he has sources on this, he says the Chinese government hates HSBC Bank. He's also spoken with people at the Bank of England who supposedly hate HSBC Bank too. So I don't know who's
So they have no central bank buddies.
Well, here's the thing about HSBC Bank for your listeners who are not familiar. There's an episode on the Dirty Money documentary series on Netflix, and it talks about HSBC Bank should be the corporation here in the US that has the largest fine. It's Pfizer right now. I think it's 1.9 billion. That's the corporation that's paid the largest fine. It should be HSBC Bank because they've knowingly been laundering for decades, many billions of dollars per year for terrorist organizations, drug cartels, organized crime. And yet they barely paid, I think, $1 billion fine. And there were no criminal charges. So there was an enormous amount of corruption. James Comey was hired here in DC as a fixer. He was put on the HSBC Bank board of directors for about 18 months. I think from the public filings, he was given about $6 million worth of cash and stock options to negotiate a deal with the Department of Justice to get all the felony charges dropped. But the documentary episode on Netflix, it only talks about a small amount. The real number is much, much larger from what I've heard of money laundering that occurred. This is one of the worst banks. This bank has a lot of political enemies.
Right. But so I'm just trying to think this through. If they go down, let's say they're out of the equation temporarily or maybe permanently in China, then how does their real estate market come back online? Because it's so driven by debt and the expansion of debt. And, I was reading a statistic the other day that in some of these urban areas where there's just these huge, huge property bubbles, the average cost of a house or an apartment is 46 times the annual income. 46 times. And the only way that people can afford the debt or the mortgage is because they assume they'll be bailed out by capital appreciation. So if you have that happening,
I don't know how central planners are going to fix that. I don't even want to try to think about how central planners are going to fix that. Look, the whole thing's a bubble. Yeah. The whole thing's a bubble.
Yeah.
They figured out how to keep it going longer than a lot of people thought.
Right.
Can they change the rules? Can they print more? Can they maybe forgive, similar to what the US with student loans? Can they forgive some of those mortgages? Can they maybe figure out a way so younger adults will buy these things? Maybe. But younger adults now in China with the bans on crypto for regular Chinese people, with the what the government's doing there with Chinese stocks, a lot of young people now, George, and we're just seeing this in the data in the last month, they're buying physical gold. Now the paper gold price here in the US in US dollars, that's getting smashed. The Fed's balance sheet's going up, but the gold, the physical demand numbers, whether it's central bank net purchases globally, there's an enormous amount of central bank demand for physical gold. The physical gold purchases for demand in India and China and Asia are all back to 2019 or higher levels. So we're seeing big spikes in the actual demand for gold that will precede a big move in price. The other thing I think we're going to see in the gold market is we're going to see, this is the first time in history too, by the way. I've been covering gold and silver for almost 15 years now. And the producing gold miners, so the larger ones and the mid-tier ones, they've never had this much cash and clean balance sheets without debt, good profit margins, even though gold prices smashed a little bit. It's down, $400 since a year ago. So it's still relatively high, even with oil prices rising. A lot of gold miners are still producing gold around $1,000 or $1,100 an ounce. So the margins are still really good. You're going to see cash flows right now, and no one wants to talk about this because they're hated. The gold miners are hated. All the global macro fund managers are all shorting gold. They're talking about how they're hating gold. You're seeing news story articles about this BlackRock portfolio manager just dumped all his gold holdings. Yeah, he dumped GLD and Barrick Gold. That's probably all he owned. Because the majority of these global macro guys, right, that say they're bullish gold, they don't buy any metal. They don't do any research work on any quality gold stocks because they're managing tens of billions of dollars. And the only thing that they can buy without moving the stock price is they buy GLD or they buy Barrick Gold. That's pretty much it. Or maybe they buy a gold ETF like GDX or one of those. So those are their only options when you're that big. But for the smaller investor, there are incredible bargains. There are companies selling between 2 and 6 times cash flow that are making a lot of money, that are raising dividends. You're getting paid to wait on some of these companies. You're getting 2 or 3% dividend yield. and the company's doing just fine, and they're going to go out in the next 6 to 12 months and they're going to buy a producing gold miner at a very deep discount. So the shareholders of the larger producing gold miners, so these are like not Barrick Gold. Obviously, I don't like Barrick Gold. I get questions like this all the time. How do you get that? How do you feel about Barrick Gold? I've never liked Barrick Gold. They were involved in the paper price manipulation. So your Kirkland Lake Golds, your Newmont Minings, your Agnico Eagles, some of the better run mid tiers, they're going to go out and they're going to buy quality gold assets. And 2 or 3 years from now, they're going to be minting money. Yeah. So yes, in the short term, things can go down. But the Denver Gold Forum was last week. That's one of the biggest gold conferences in the world. And the stuff I was hearing from gold company CEOs and gold fund managers that were there or spoke to the gold company CEOs, there's going to be the largest acquisition boom in the next 6 to 12 months. You've never seen acquisition boom like this before, because the gold miners have never had cash to go buy assets, to go buy cash flows that are this deeply discounted.
So when you see historically in these cycles, when you see this consolidation period, what does that usually mean for the price of the stocks themselves?
Okay, so there's going to be winners and losers, and it really depends on the deal. And I wrote an article for patrons in the last month or so analyzing a deal from 2 or 3 years ago, because at the time, this deal was with Kirkland Lake Gold, and they were criticized heavily for buying a higher cost mine in Canada, Detour Gold. So at the time, the cost of the gold production was around $1,200 an ounce, and Kirkland Lake Gold has the highest grade, lowest cost. They have arguably the best gold mine on the planet, the producing one, Fosterville. Okay. So they were heavily criticized at the time for buying a gold mine that was higher cost. The management team at the Kirkland Lake Gold said, over the next 2 years or 3 years, we're going to execute our business plan, and we're going to drastically lower, we're going to increase gold production, and that's going to lower cost of goods sold. We're going to amortize that, and we're going to drastically lower the cost of the mine. Now, a lot of the gold analysts 2 or 3 years ago when this deal happened didn't believe them. But in hindsight, they executed. And the company, Kirkland Lake Gold, is arguably the best run gold miner on the planet right now. So they are buying back their shares because their shares cheap. They have tons of free cash flow. They're increasing dividends. And they're probably going to go do another acquisition and add even more quality assets at a deeply discounted price.
And have the shares of the miners gone down even more than the price of gold over the last, call it, year?
Yeah, it's really bad. But as a value investor, as a contrarian, the bargains are incredible. So right now, the gold stocks, a lot of them are pricing in $1,200 an ounce gold.
Wow.
They're pricing in $1,000 as if the gold miners have only, for some of their costs, $100 or $200 an ounce margin. Meanwhile, like I said, the gold miners are producing around $1,000 or $1,100, and the gold price is still in US dollars at 1,750 when we're recording this interview. So they have enormous profit margins.
Yeah.
So the miners are still making good money. The market doesn't believe them. The market is valuing a lot of these gold miners at around $1,200 an ounce, or some of the gold miners are as cheap as 2 or 3 times cash flow for companies that have good profit margins and free cash flow, clean balance sheets. So they're pricing in as if the companies have no profit margin.
Right.
That is how negative sentiment is right now for gold stocks. So it is a buyer's market. Now, your question was about who's going to benefit. The shareholders of the larger companies, the small and medium-sized companies, again, not Barrick Gold. I'm not a fan of Barrick Gold. I don't think I'll ever be a fan of Barrick Gold. The larger and medium-sized companies are going to be the ones that are going to benefit as long as they don't overpay for an asset. Although in this market, I don't think a lot of companies are going to overpay unless there's bidding wars for specific ones. But if you buy assets cheap, and you say this too, if you buy assets cheap, over the long run, you can make a lot of money. So you're betting on management then too, because if management buys assets they think are cheap, but then management screws up building a mine, and there's a lot of things that can go wrong with a mine, which is why I prefer the royalty and streaming companies. So your Franco-Nevadas, your Wheaton Precious Metals, Royal Gold, Sandstorm Gold, those guys. Because they have diversified business models, their costs are protected. So even if oil prices go up or labor costs, there's a union protest in another country in a mine, their profit margins aren't as affected as a regular gold miner.
And then how do you think Bitcoin plays into the price? And I have my own opinion on this, but you hear all the time in the mainstream media them saying, "Oh, gold is dead because all the kids now and all the millennials or the Gen Z or whatever they are, they're never going to invest in gold. Their gold now is Bitcoin. So you're going to have all that capital flow that would have gone into gold in an environment of stagflate, tax, and lie, that instead of going into gold, now will go into Bitcoin." What's your opinion?
I think a lot of people, and it is growing, have sold a lot of their gold, a lot of their silver, a lot of their gold stocks, and they're trying to get rich quick because, let's face it, George, this world, a lot of it's social media and people's attention span is what have you done for me lately?
Right.
A lot of people are trying to get rich quick. A lot of people, they're not really investing, they're gambling. Okay, I've met crypto people, and not every crypto person is like this, but I met crypto people, and their idea of diversification is they bought like 5 or 6 cryptos and some NFTs. that's their diverse. I have people in the comment section like cussing me out. Not a lot of people right now in my videos, thankfully, but I do have some people saying, "How dare you say anything nice about gold? I'll never buy gold again. Just do crypto videos, and then maybe I'll pay attention to you." So as a contrarian, this is good,
right?
But unfortunately, we're in an environment now where governments are going to be, they're going to allow, in my opinion, they're going to allow Bitcoin and crypto prices to keep rising. But as central bank digital currencies are scaled up and the pilot tests for them are increasing for cross-border payments, and they're testing these things out more in the private economy, the tax laws on Bitcoin are going to be nuts. Bitcoin and these cryptos are going to be nuts. But let me just say that the politicians and the bureaucrats, these elites, and I've been at the DC Blockchain Summit. I've been going to them every year that they have an in-person conference. So I've listened to speeches in person from people high up in the Treasury Department, CFTC, Securities and Exchange Commission. They admit in these speeches, George, here in DC at Georgetown University at the DC Blockchain Summit every year, they own a lot of Bitcoin.
Yeah.
I'm suspect because I know how corrupt everything is. I'm suspect that they actually pay taxes on it. So they're like, "Oh, I buy crypto for my kids. Every time the price crashes, I just buy more for my kids or my wife and stash it away. I know it's going to go up." I'm just worried that this is a Trojan horse as a libertarian, that they're going to increase taxes more. They're going to, I don't know if they can fully ban it, because there's all these people saying that like, okay, I'll just set up a VPN and I'll get 3 or 4 passports and I'll forfeit my citizenship and go to another country. But the governments can't fully ban these crypto. They can try, but they can sure as shit try to tax it a lot more. But I think they're going to allow it to go up until these central bank digital currencies are ready. But the elites don't play by the same rules that we do.
Yeah, right.
So like in China, and these rules just came out. Do you really think the Chinese Communist Party official? I mean, they've stolen, there's tons of documented evidence about billions of dollars stolen by Chinese Communist Party elites. If a billionaire criticizes the Chinese government, the guy goes in prison and they steal all his assets, and it's divided up by the elites there. So do you really think that all the tax rules for Bitcoin and all the bans, they're not going to apply to the Chinese Communist, the elites and the Chinese Communist Party? So the elites here in DC are not really that much different. Yeah. And same thing in the European Union. The people running things are scumbags, complete and total hypocrites, complete and total scumbags. Most of them are champagne socialists.
Yeah, I totally agree. A funny story, my sister texted me, I believe it was yesterday, the day prior, that she was on a flight. I think it was from Dallas, or I don't know where she was going, but she sat next to Hank Paulson.
Did you know that he had his capital gains taxes on his Goldman Sachs stock waived so he could be U.S. Treasury Secretary? Did you know that over $500 million in capital gains taxes were waived?
I didn't know that.
Yeah. Yeah. The perks, the average American, I said this earlier in the interview, does not understand that the people here in DC, a lot of them are lawyers, white collar criminals, understand how to work the system, cheat on taxes. There's tons of politicians here that haven't paid taxes in years.
Yeah, right.
We're talking like 6, 7, 8 figures of back taxes, and they got buddies in the IRS, probably will never pay them.
Yeah, the same people that are saying tax the rich.
Yeah, of course. But it's really just what they really mean is tax the poor people, tax the working class, tax the middle class, screw over small business. Because large corporations are in debt.
That's what they never tell you, Jason, is that they're sitting here trying to create inflation, saying that it's only transitory. And that's the most regressive tax possible.
Well, the inflation is really just the Cantillon effect. So that's currency creation. And that allows the people here in DC and their corporate buddies, either on Wall Street or Silicon Valley or the other major cities, to give them bailouts or unbidded contracts or like, extra government contracts or bribes.
Yeah, and then they just get back end. They get the kickbacks or whatever it is. And then it's kind of this, you scratch my back, I'll scratch your back.
Well, and then they blame capitalism. Yeah, and then they blame capitalism, but it's not capitalism because they're not allowing bankruptcy. They're not allowing competition. They're allowing some bankruptcy, maybe small businesses to fail or the individual to fail. But any large corporation or special interest group that knows the right politician or bureaucrat and has the right lobbyists, right army of lobbyists, and pays the right amount of bribes, they're going to be well taken care of. And that's what all these programs, infrastructure, Green New Deal, look at all the size of these bills, George. So have you seen the pictures of like the size of the infrastructure bills? Thousands of pages. And I can guarantee you that 90% of the pages have nothing to do with infrastructure.
Yeah, exactly.
They're all line item, pork barrel legislation stuff, Christmas tree stuff, or log rolling, pork barrel legislation that's stuck into the bill. So this lobbying firm can earn their high fees, make an extra $5 million or $10 million. They all get bonuses, but then the corporation gets an unbidded contract for hundreds of millions or billions of dollars.
Yeah, I mean,
but then nothing, but then the real economy, the infrastructure doesn't actually get fixed. That's the problem. So if they were actually if we're going to have bullet trains here in the US, we're like the only major country that doesn't have any. I think California is doing one from Sacramento to Bakersfield. The whole route was supposed from San Francisco to San Diego was supposed to cost around 80 billion. and one stop cost 80 billion. That's how much waste, fraud, corruption, and abuse in California, just from, I think, Sacramento to Bakersfield, a small amount of the total. They spent like tens of billions on that.
And that's why I say that people that try to, or the people that believe the solution is to just elect better politicians. They just don't understand that if you allow government to have that type of power, it's going to attract people who are sociopaths. It's going to attract people who have an insatiable lust for power, and they're going to use that to their benefit and to the disadvantage of society at large. So the only solution for better government is smaller government. That's what it always goes back to, because then it will attract people who aren't necessarily all about wealth, power, and micromanaging people's lives.
Well, also term limits.
Yeah, there you go. Exactly.
Why do we need senators who are over 80 years old and they're on all these medications or they're vegetables like Joe Biden or some of the other people in Congress?
Yeah, great.
It's almost like a seniorage thing where it's for life. And then you have situations now in the House of Representatives where these seats are passed on to the next generation, the kids. That's how corrupt the system is. So we need the system is broken. Okay, when you vote, maybe at the local level, maybe you can affect a little change, but at the federal level here, the whole system at the federal level, George, is resistant to change. So the American people elect change candidates every couple of years. They come here to DC and nothing gets done.
Smaller government. That's what we need.
Well, this whole debt, but it's not going to happen until we're not going to get smaller government. Let's be honest. We're not going to get smaller government because a lot of people don't actually vote libertarian. We're not going to get smaller government until the punch bowl, until the world reserve currency is taken away.
Yeah, right. Yeah. It's going to have to be forced upon us. It's not going to be a decision that we can make.
Exactly. I don't know when that's going to be because people have been predicting that the U.S. will lose world reserve currency for a long time, and it has not happened. But you have all these governments making the same very similar policy mistakes in the 1920s and 1930s with beggar thy neighbor policies. We have not seen yet big retaliatory tariffs from all these governments because that will accelerate crashes in local economies. So we have not seen that yet, but we've seen a lot of the similar policy mistakes of monetary policy, money printing and tax increases, stagflate, tax lie from beggar thy neighbor in the 1920s and 30s.
Yeah, one, I know we're running short on time, Jason. One thing I'd like to get your opinion on quickly is this debacle in Afghanistan and how that may affect the petrodollar, and then therefore the dollar as the global reserve currency.
I don't think the petrodollar matters as much as most people think anymore. I mean, the US has capital markets. So the US is more about a lot of capital still wants to come to the US and buy US stocks, buy US real estate. The US has transitioned more to like capital markets rather than the petrodollar. And even the petrodollar, it was a big deal the last financial crisis in 2008. And the way they got around that was they just subsidized the shale oil bubble. The majority of the shale oil production, George, that was grown, and the shale oil production is down a lot now, but it was growing for many, many years, over a decade. It was unprofitable.
Right.
But that was a lot of extra oil production from the US. The US at one point became a larger producer than Saudi Arabia. It wasn't low cost and it wasn't profitable like Saudi Arabia, but the US had a lot of oil that it was producing. So that was how they got around the petrodollar, and in all the capital inflows. Like a lot of that dollar milkshake, because that Brent Johnson has talked about, I'm friends with Brent, it's already occurred. There's been massive amounts of capital inflows into the US. I mean, unless these other governments just say, you know, the whole thing's a Ponzi scheme, we're going to massively increase money printing even more than we already are. We're going to take the debt globally from 300 trillion to 400 trillion in a couple of years. And then all that capital flight comes to it's the Forex is changed out of those foreign currencies into dollars and comes to the US.
Yeah.
You're not going to have that type of crazy capital inflows.
So
I mean, the US already anticipated this, George. Did you see they set up the foreign repo facility so they can actually block foreigners now dumping treasuries with the foreign repo facility? So foreigners don't even have to sell all their treasuries. So if China wants to, because I've seen people post that China's just going to collapse the dollar, they're going to dump all their treasuries, the 1 trillion or so left of treasuries that they own, they're going to dump all of it. It's going to collapse the dollar. That's going to end things. Not at this point. With the foreign repo facility set up and the amount of QE the Fed's doing still around 120 billion a month.
Yeah.
I mean, I think they would absorb, if China did try to collapse the dollar and dump all that, that would hurt China's credit rating. So I don't think that they would do it, first of all, at least in the short term.
Okay. Yeah, that makes a lot of sense. And so your view is that we have significant consumer price inflation here in the United States, very similar to what we saw in the 1970s for the next, call it 3, 4, 5 years. But at the same time, it doesn't necessarily mean that the dollar on the Dixie, because that's just a measurement of the dollar against other foreign currencies, most specifically the euro. You don't think that goes down to 40 or 50? And just to give some people context, it's about 93 right now. You think it might go down to maybe 80 or 85, something like that. Not a dramatic drop, but we still do have consumer price inflation inside the United States. Am I articulating your position?
So I think the general trend is going to be worse stagflation and worse shrinkflation. We will have temporary bouts where maybe prices temporarily decrease, but then politicians and the PhD economists and MMT people that advise the politicians here in DC and on Wall Street, they then tell the federal government here in DC and the Fed they need to print more and spend more.
Okay.
So any bouts of deflation in any of the phony government economic data or a dollar index rally, a massive one, will give the PhD economists and MMT people and the politicians that listen to them an excuse to spend more.
But you don't think the dollar's collapsing on the DXY?
No, because let me explain why.
Okay.
So the dollar was getting very, very weak last year. And what happened? You started to see emerging market governments like India, because they wanted to boost their exports. They ran record trade surpluses in 2020. India did. They ran a record. I think it was over 520 billion. It came out through an insider in the Treasury Department and their central bank. They were printing insane amounts of Indian rupees. And guess what they were buying? Dollars. To devalue their own currency, they were boosting the dollar.
Yeah.
So you have games from all these governments where we're in a dollar standard. So in a dollar standard system, they want to devalue their currency to try to boost exports. But now India has really bad inflation. So now India, they've had currency problems because they did too much printing.
Right.
So yeah, they ran a trade surplus last year. Now they have inflation problems. Now gold demand is increasing again. So this is the games, the average global macro person, actually most global macro hedge fund managers are deflationistas and just short gold. I don't think most of them really, they just talk about velocity of money chart most of the time. It's kind of, if we see velocity of money spike, then that is hyperinflation signals.
Yeah.
But you can have stagflation without velocity of money because the US imports so much goods. The US imports so many goods. And because all these other governments are all doing similar policies and they make a muck of the system with stagflate, tax life. So you have all these governments creating distortions and their central banks creating distortions and misallocating of capital. It's just a mess. And then you have all these extra rules on the supply chain, rules, regulations. You have all these industries like the seafood industry here in the US. You had all these fishermen in different states and counties. They weren't allowed to go fish. So of course there's going to be shortages. And of course, seafood prices on certain menu items are going to rise, and then the restaurants are going to pull them off the menu, or the price is going to increase.
Yeah. Yeah, it goes back to what we were saying earlier about commodities. And from the standpoint of when you're trying to figure out price direction, you cannot just get hyper focused on demand. You've got to look at the supply side of the equation. And you can have an environment where even though demand is going down, if supply is going down at a faster rate, prices will still go up.
That's what your friend Chris McIntosh got on the coal market.
Yeah.
So that was before Chinese demand spike because the rest of the world is not buying any coal. Well, for the most part. I mean, everyone's trying to phase out coal. The US phased out coal a long time ago. Almost all, and this was under Trump because natural gas was so cheap. Most of the coal-fired power plants switched over to natural gas. So it happened naturally without politicians mandating it.
Yeah. As far as the supply constriction.
Well, the price was so cheap, people were looking at it, and then it made a lot of sense from an environmental standpoint. So you had a cheaper commodity price and then also an environmental benefit. So it made sense to switch over there.
Okay. Yeah, over to the net gas.
From coal, yeah. So the US did it without politicians forcing them to do it for a number of different reasons.
Yeah. All right, buddy. I know that we've gone a little long here. That was a fantastic interview, as always. Just value bombs left and right for the viewers and listeners. So for the people watching this right now, Jason, that want to find out more about what you do, your YouTube channel, and really your Patreon, which is just a wealth of information, how can they find that? So
for my YouTube channel first, there's almost 2,000 free videos. I've been doing this for a very long time. I've been covering the gold and silver market for almost 15 years, global macro, Austrian school economics. My day job in the past, I was an oil analyst at a paid newsletter company, also doing small caps and dividend stocks. So that's my free channel is Wall Street for Main Street, WALLSTFORMAINST. It has almost 9 million views and over 40,000 subscribers on there and almost 2,000 free videos. My Patreon is only $5 a month for really high level research on a lot of companies, global macro sectors, about oil companies. I did a uranium article a couple weeks ago. I'll probably, depending upon when this interview is released, I'll probably have a uranium podcast out going through the investors presentation of a uranium junior that's actually been around a long time, because I didn't get to talk about uranium. Maybe I'll come back on in the next couple weeks and talk about uranium with your listeners if you want to do a separate show. The uranium price is up a lot in the last month. So you've had a big spike in the uranium price. Sprott's Physical Uranium Trust has really ended the uranium bear market. However, there's going to be a lot of Vancouver hucksters and frauds now that just got into uranium that have not been around in the uranium market, and they're going to be paying people on YouTube channels to do interviews, or they're going to be sending out email blasts, and they're going to act like they have the best investment idea for uranium. But I would prefer uranium companies that actually have a business plan for a number of years, and they've stuck with uranium during the bear market. They've hunkered down and they actually have a good business plan, and maybe they can actually make some money soon, restart a uranium mine in the next year to 18 months. Yeah. So a lot of opportunity, so but you got to know what you're doing, and you got to make sure that you're investing in a solid company. Well, I would be careful about companies that are overhyped and overmarketed, because when commodity prices rise, whether that is commodity prices or cryptos with initial coin offerings or marijuana, you have the Vancouver marketers come out and just start to promote basically new companies, or these are shell companies too. So these are LLC companies that own a lot of different assets. They're tiny little assets. They just pay the LLC registration. There's 10 little companies in a tiny little office space, and they all share the same phone line. And that's not really, I don't like the juniors. I focus on companies in general that are either already making money, low cost producers, or that are that have a business plan. They have a mine that's close to production. So right. I focus on those things because I'm more about, with the royalty and streaming companies, free cash flow. And that's patreon.com/Wall Street, WLSTFORMEINST. There's over 180 articles behind the paywall in the last 15 or so weeks. I think there's almost 30 articles that I put out that are in depth.
Yeah, guys, listen, if you're interested in gold, uranium, or the commodities, or global macro, I cannot recommend checking out Jason's content enough. Not just the YouTube channel, but you got to check out that Patreon page because there's just some incredible research over there, and it'll be definitely worth your time. All right, Jason, great talk. I can't wait to do it again. We'll have to see how this stagflate, tax, and lie pans out in the next 2 years, but you've definitely been right so far. So I've got a hunch you're going to continue to be right.
And your listeners got to remember that even if the Fed does taper and asset prices temporarily deflate, that in the real economy, the distortions, there could still be cost increases. Because that's what I'm hearing from people who work in supply chains. I speak to people who work in supply chains in the US and in China. And guess what? Wages in China over the last 15 or 20 years, they're up 500% or more for factory workers. So this whole global macro narrative that people keep repeating that China is going to export deflation, maybe it was true in the past. From what I'm hearing from people who work in supply chains in China, the days of them eating cost increases of factories producing at losses, those days are over. They're passing it on with shrinkflation and they're increasing prices. So it's going to get worse before it gets better with the stagflation. You're hearing that now with Costco CEO and Costco buys a lot of products from China. So
all right, buddy. Well, I can't wait to have you on again. We'll talk about uranium and hope you have a great day. Keep it locked down there in Washington, D.C., the District of Criminals, right? Have a good one, man.
Hi, guys. I'd like to invite each and every one of you to the next Rebel Capitalist Live event. If you are a fan of the Rebel Capitalist show, I guarantee you will love the live event. The next one is Houston, where you can meet and listen to speakers, all your favorites from the Rebel Capitalist show. People such as Dr. Ron Paul, Chris Cole, Lynn Alden, just to name a few. If you want to check out the rest of the speaker list and find out how you can attend, we'll put a link in the description below, or you can just go to rebelcapitalistlive.com. This is an event where you can learn to build wealth and thrive in a world of out-of-control central banks and big governments. But it's not just about building wealth. It's about increasing your freedom and networking with like-minded individuals, fellow rebel capitalists. It's an amazing event. I know you'll absolutely love it. Check out rebelcapitalistlive.com, and I will see you in Houston.